I think what we have is in an environment where, markets have done very well. The Chinese market has been very strong. So day to day, depending on what the news flow looks like, you may see these sort of, movements sitting around. So for us, it's nothing particularly dramatic that's occurring on a day to day, aspect. The bigger question is what's going to happen over the next sort of 6 to 12 months. And I think what the market is looking at here is we know there are vaccines around. We know that as that rolls out, we'll see more of a return to normalcy in markets, and that's going to drive economic recovery. The question is do we start to see that in 3 months, 6 months, or 12 months? And that's why I think the market, with where it's got to a pretty, pretty where it's been quite strong, is going to continue to have a bit of volatility around that.
Okay, so Joshua, that is the long-term time frame that you're looking at. What about the short term before Trump leaves office? Already, it feels like he's trying to unleash more Chinese measures before he steps down. Does that mean that we could be bracing, or should we brace for more volatility in the Chinese equity market?
Yeah, and I think that's exactly what we're going to see, because you're going to see the concerns around what Trump may or may do before he leaves office, and then you're going to see people looking for that tone about what Biden may adjust as he comes into office. What I would say is, unless it was something very, very dramatic to come out of Trump, then we will be more likely to see any easing, or what people perceive as an easing in trade policy would be something that would be taken from a more positive perspective. So yes, over this ensuring few days or few weeks until we have more finality in that, then I think we should expect a little bit of volatility day to day.